Ethereum enables is folks to bootstrap very easily and spin up an application that's in a very simple manner that can reuse lots of stuff. What we're trying to build with Atomic really is to make it as simple as possible for people to be able to access not only kind of these more advanced concepts like DLCs, like what is a DLC? How do I use it? What if it's just in an app and it's a click of a button and it's super simple? That's really what we're trying to enable for folks, is for open finance to be simple and easy for folks. And that's really, I think, the way that financial tools for Bitcoin should be built, right? If we're going to just keep sitting here and build custodial financial tools for Bitcoin, we're going to end up with FTX in the future. We're going to end up with BlockFi in the future.
This is Decentralized Radio. I'm Tristan.
And I'm Ryan.
The goal of this podcast is to help educate you on how to live your most optimal life. We will host industry expert guests to shed light on topics that matter.
We are not gurus, rather two individuals who have had to pave their own path to health and vitality, independent of the centralized systems that plague modern society.
All right. Hello, everyone, and welcome back to another episode of Decentralized Radio. Today, we have Matt from Atomic Finance on the line. Matt, how's it going, brother?
It's going well. It's going well. Enjoying the last days of summer here.
Yeah, I was talking to someone else who's in Canada, and it was like cloudy the other day, and he's like, "Oh, so much for seeing for the sun for the next 7 months."
Honestly, yeah, it was cold for the first time yesterday, so we're like, well, I guess winter's coming early this year.
Yeah, it's rough at the higher latitudes, but I was telling him you kind of just got to lean into the winter and try and get cold adapted. But that's why maxing in the summer is so important. It's the same thing's happening here, right? I mean, we get a little bit longer in Wyoming, but these sunny fall days, I'm like trying to hold on to for the last bit of sunshine before, there's a random snowstorm in October or something.
Totally. I feel you gotta soak up as much vitamin D as you can get while you can. So that's the nature of it.
Yeah, it's cool. I was talking to Svetsky about this in the last podcast. He related it back to like economic cycles and social cycles. It's like if you know the winter is coming, you can prepare accordingly. But it's when you kind of don't know or you just make these bad decisions along the way. So it's really fascinating. But Atomic Finance. I talked to Tony a good amount, so it's kind of fun to get introduced to the other half of Atomic right here on the spot. I think it's really cool what you guys are doing, but I think it is a little, it's that weird space of, yield, where that's a tainted word nowadays. And you guys have talked a lot about that. And even Tony was putting out, he's like, well, what do we call this? It's not really decentralized, but it's not, it's also Bitcoin backed and, self-custody. So we'll get into all of that. But I guess before that, maybe just high level is like, what is Atomic? How did you get into crypto? Before we even get there, what was the draw? And I think you guys were in college, university together, and he pilled you or you pilled him. I don't remember what it was.
Well, actually, originally it was my dad. Actually, was the original pilling. He got me into Bitcoin way back in 2013, 2014. So he's a bit of a gold bug, and so any alternatives to government currency were very interesting to him. And so obviously Bitcoin fit into that category. So, I can remember sitting there back in 2013, 2014, managing my dad's Bitcoin. He's not a technical guy. Sitting there, why is the transaction taking so long to confirm? I didn't understand blocks at the time. Fast forward like a couple of years to 2017, myself and Tony, we went to the University of Waterloo up here in Canada together. And basically, I wouldn't shut up about Bitcoin to him. I was like, hey, this is really exciting technology. What's being built here? And funny enough, we were in Waterloo, right? And some of you may know, that's really somewhat of the birthplace of Ethereum. If we remember, Vitalik originally went to Waterloo, and so there was a large kind of crypto community, large Bitcoin community, but also a very large Ethereum community. And so we got kind of sucked into that. Based on And there's certain values that are interesting, right? There are certain values that say, hey, you know, especially DeFi, right? Financial tools. Humans should be able to access financial tools from anywhere in the world, right? Like, why is it that some people are able to access this, you know, in one place, and, you know, you go to a totally different country and everything's restricted? And so that idea of open finance was very kind of exciting to us. And so we went down that rabbit hole of, you know, going and building an Ethereum, and eventually, you know, came out the other end, realizing that, hey, the innovation here at the end of the day really is Bitcoin. This is the thing that's, you know, going to improve things for humanity. And, you know, we never looked back.
Yeah, that's really cool. Well, that's funny that your dad was like found out about Bitcoin, but then didn't really know how to use it, so you're using it for him. Is he like just like this anti-establishment guy in general, or is he just really into the currency side of things?
Yeah, definitely anti-establishment, I would say. You know, I'm originally from the west coast of Canada, so BC. So he's, you know, he's got a boat ready to go to sail off to wherever he needs to escape the, you know, regime up here in Canada. So
yeah, well, I mean, what is he saying now? Like, it must be crazy, right? Like, I probably wouldn't be able to lose. I would lose my mind if I was in Canada, I think, right now.
Well, it's funny. I feel like, you know, feel like what we've learned over the past 3 years is that the conspiracy theorists are only 6 months off, right?
Yep.
And so I mean he's been complaining about Canada and wanting to get out of Canada for a while, and I don't know, maybe if it eventually gets too bad, then we'll go that direction. If Trudeau gets elected again, I think we're headed for a really tough situation up here. Maybe there's some hope with an alternative, but you know, it's tough. But I mean, he was ahead of the curve with everything that went on with COVID, which was really impressive, like the lab leak, and, you know, just finding out about those things and realizing, hey, you know, what you think is a conspiracy theory ends up being true a couple months later.
Yeah, I think it's like once you look at life through this lens of maybe just not trusting these centralized entities, you really can't go back. And then everything just kind of compounds from there. And it turns into all aspects of your life. And that's why, you know, for me, it was, you know, made so much sense, you know, Bitcoin and, you know, sovereignty through health and things like that, obviously. And then COVID happened, and it's like, oh, yeah, well, this is now extremely obvious what's going on. But yeah, for me, Canada, I never really understood the dynamic because so many of you live right near the US, all in big cities, that there's not this maybe like back and forth. Like here, like I'm in Wyoming, like living in Wyoming compared to living in New York City or California is like a drastic difference. Same thing with Texas and Florida. Whereas in Canada, I don't know, maybe if you live in like Saskatchewan, it's a bit more chill, but it's just so many of you are in the big cities, I'd imagine.
Yeah, that's very true. I would say we have a similar thing, but as you're correct, like we all live right next to the border because you know, no one wants to live up in Iqaluit, for God's sake, or in the Yukon. And so like if you live in like Edmonton versus like Toronto, like that's a big difference, right? If you live on Vancouver Island versus Vancouver, you know, that's a big difference as well. And so I think you have that same thing. It's just all along this latitude, which is just right up against the American border there.
That's funny. I saw something hilarious the other week on Twitter. It was like, it would be so easy for the U.S. to take over Canada because literally like all 90% of you are within like 100 kilometers or 200 kilometers of the U.S. And yeah, what are you going to do about it? But it's like, oh, what do we gain? Resources and some nice people. But yeah, it was just funny. It was hilarious.
Well, let's be honest. Like Canada is the United States' largest trade partner, and you know, we basically delegate to you guys for our military. So it's as close. It's as close as you can get to you know, the 52nd state as you can.
Yeah, it's so fascinating, but we'll see. Trudeau, man, he's a character. But back to Bitcoin, more importantly. So you went through this little Ethereum phase, I guess. So you were kind of just stoked on Bitcoin like the whole time, but maybe just building on Ethereum from a decentralization perspective was more attractive? Was that kind of what drew you in? And then I want to get into maybe like the smart contracts versus DLCs and how that difference is actually explained by someone who knows what they're talking about. But let's start with there. Is that kind of what attracted you to Ethereum in the first place?
Yeah, I think we originally got attracted by just the ability to build like financial tools very easily. And so, us being, we were taking computer science at University of Waterloo, and so for developers like, and even today, I would say like Ethereum has a very bustling, developer ecosystem even versus Bitcoin, because it's very easy when you're just focused on the what, right? Like, what can Ethereum do? Oh, it can do all these things. But if you're not focused on the why, then you miss the point. And so, at the very beginning, we missed the point, let's be honest. And it was only through the process of actually myself and Tony, we started working at Consensus, which obviously was run by Joe Lubin back in the day. But funny enough, I was working on a team called Liquality, and they were actually working on atomic swaps between Bitcoin and Ethereum. And on the team, there were some Bitcoin maximalists that were actually on the team. And they kind of taught me the values of Bitcoin, even, kind of within this larger organization that was kind of pushing for different values. And so, they taught me things like, hey, like, why is the Bitcoin supply cap important? Why is it so important that Satoshi, gave us this gift and then disappeared? Why, why is it so important that, Bitcoin doesn't change, or when it does change, it goes through a soft fork, things of this nature. And so it was through that process that I got really familiar, obviously, with Ethereum development and Bitcoin development, and was really able to see the differences between them. How are the philosophies, kind of matching up? And that's kind of what got us down that rabbit hole of understanding, well, hey, that the ideas of how you build an Ethereum, is really, hey, you build a smart contract, you kind of build this honeypot, really. You can update the contract whenever you want, you pool funds into it, versus Bitcoin, which is like, hey, let's do as much of this peer-to-peer and in a secure manner and in a safe manner, and let's make sure that the funds aren't at risks. And so these philosophies were constantly going back and forth. And so at the time, we actually took kind of the knowledge we had from atomic swaps, and we pushed that over to, hey, atomic swaps are interesting, but there's not really any like other financial tools for Bitcoin. What if we could do something with loans? So that brought us into atomic loans, where we built a cross-chain product for that. And then what happened? DeFi summer. The tokens came in, the governance tokens, the money printing. And it came to the point where we realized, if we want to survive in this kind of cross-chain, or more being in, DeFi Ethereum, that we were going to have to go out there and actually create a token ourselves. And that was never something that we felt comfortable with doing. And so we then started looking around and saying, okay, well, actually, why don't we just build this on Bitcoin itself? And at this time, DLCs were really starting to come to fruition. And we'll get to, I guess we'll talk a little bit of like, what is a DLC, but basically, being able to create contracts directly on Bitcoin. And then we ended up going down that rabbit hole. Yeah.
Yeah, it's so interesting, right? Because I think there is this like very attractive allure to Ethereum and building on Ethereum, and creating these projects. And a lot of Bitcoiners kind of went down this rabbit hole, not from me for like building, but just the attractiveness. And then I was always skeptical. My friends were like, back in 2017, are like, yeah, let's figure out something to do an ICO. I was like, we don't even have an idea. They're like, no, but we could just raise money. I was like, this just is such a scam. And then Svetsky was on, he said the same thing. He was like about to go do a token, and they read all these white papers and was just like, this is an absolute scam. And I think after the ICO craze, I was pretty much convinced as well that a lot of these tokens, it was just, just to make one. And I had friends trying to exploit that and what have you. And for me, it was, you're young, you're just trying to be in this like new, exciting area of blockchain technology and whatever that changes, which we know now it's a lot. The blockchain itself is not the core principle that's most important. And then eventually for me, I was like, really digging down into the decentralization rabbit hole, and I was like, yeah, it's only Bitcoin really that can actually say it's decentralized. So was there any friction between you and Tony and just like the people you're around making that transition? Because one thing that's for sure is toxic, like, relationships between the two, and Bitcoiners, Ethereum maximalists, and that still holds true today. I still think actually the Bitcoin space is very, defensive, and for good reason. So many people have gotten scammed in the last, 4 years from tokens. But yeah, how was that kind of transition? Was it weird?
Hey, friend. Thanks for listening. If you really enjoy this podcast, it would be really appreciated if you left us a 5-star review on Spotify, Apple, or subscribe to our content on YouTube. This helps us get to a larger reach and a larger audience to spread this wonderful free education.
It was, it was a gradual process. I think that within our team, I had always been trying to push, I think, Tony towards like, hey, like we should focus more on Bitcoin. Hey, this is possible on Bitcoin. And I tried to be as convincing as I could. I think he was never like truly convinced until he sat down and actually read the Bitcoin Standard. And then after reading that book, that's when the light bulb went off. I guess for me, like it came from like learning from the team I had been on previously and kind of what their values were. But once that light bulb went off, like then it became obvious, I think, to say, hey, like, it was really a question of ourselves, right? It was really a question of the infrastructure that we're building today, what's going to be around for the next 10, 20, 30, 50 years, right? Is it going to be these smart contracts on Ethereum, right? Is Ethereum going to be around in the next 200 years? I don't know. Is Bitcoin? I have a lot more conviction that Bitcoin is going to be. So why don't we build infrastructure for Bitcoin that is going to be able to, be utilized for the long term and, really change our view on that. And on the topic of like, thinking of like all these tokens and ICOs, it really feels like humanity just relearned how to print money again, right? Like we just learned, hey, we can print money, and people learned that they can grift in that way. And I never think that was I don't think like Satoshi came into building Bitcoin with that intention at all. And so that seems to me like the main, that's such a big difference from Bitcoin versus everything else.
It's funny how psychology of humanity is just repetitive, right? Like no matter what happens, like if you put people in this opportunity to take advantage of other people, like they're going to do it, or they take the easy way out. And that's what it seemed like as well from a building perspective. And that's why I think Ethereum is attractive. And maybe you can shed some light on that. Like building on Bitcoin seems to be more challenging, less attractive. There's more kind of, less freedom in terms of what's going on. So how did that go in the beginning?
Yeah, I think like what you encounter with Ethereum is that any JavaScript developer can just come in and write up a smart contract, and they can push it up there, and you can do whatever, and you can reuse lots of things. We talk about the Jenga tower a lot, the idea of, hey, they like to talk about it in terms of like, building blocks. And sure, there's some aspects of that are interesting. But when you have, hey, like this token that's then wrapped into another thing, the earning yield, and, that's wrapped into another thing. And you just have all these building blocks on top of each other. So I think like what Ethereum enables is folks to bootstrap very easily and spin up an application that's very, in a very simple manner that can reuse lots of stuff. Like imagine if you want to build a DeFi application today, right? You write up a smart contract. Maybe you want to create an alternative to Uniswap. Maybe it's like some type of lending application. You write up your smart contract. You bootstrap it. Maybe you create a token. You get people to put, funds in there. You give out token rewards, right? And all you did is you put up a website and you wrote a smart contract, and that's all you had to do. And you can reuse all these other things in the ecosystem versus like building in Bitcoin, right? When we started DLC, like the type of contracts being built on top of Bitcoin were really in their infancy. And so we had to build like first the software to be able to construct these. There's no wallet application to utilize them. So we had to build the wallet application. We have to build the back-end infrastructure for like a market maker to be able to interact with them. So there's a lot more steps involved in that. But the main difference, I think, is that when you look at something like Ethereum, like a smart contract, there's a lot of surface area of attack, right? Everyone's piling their funds into that one smart contract. And so the potential for a hack to occur is very, very large. Whereas in Bitcoin, the kind of nature of it is more peer-to-peer. And so if you're entering into a contract on Bitcoin, it's usually with a direct counterparty. And so it's very unlikely that someone's going to be able to come in and actually hack that contract. There's no admin or no like admin multi-sig at the end of the day that kind of has control over your funds. And I think that's really the key difference.
Okay, so you're saying because of proof of stake and just the amount of people that are creating smart contracts is making it more susceptible to hacks. Am I understanding that correctly?
Yeah, not quite. I think it has more to do with like if you think of how folks are like building Ethereum smart contracts, you might have someone that, so say I want to build an Ethereum smart contract, I write up the contract, but usually the way they do it is so that it's upgradable, right? So you might have like various different functions. So like, oh, I lend and then I'm owed this much amount of money. But the problem is you have like one admin of the contract that can upgrade it, right? So, and usually that's like some type of admin multi-sig, a 3 of 5 or 6 of 8 or whatever it is. And they can go and upgrade it at any moment. And that causes lots of problems because then they can introduce some type of bug and maybe they even take advantage of that themselves. So I think it has more to do with the actual architecture of it that results in these type of vulnerabilities being introduced versus kind of the default architecture that exists in Bitcoin. It's kind of the concept of like in Ethereum, you have an accounts-based blockchain versus in Bitcoin, it's a UTXO-based blockchain, which results in these very different architectures being built.
So this admin kind of like rights, is that on every smart contract then on the Ethereum blockchain? That's just kind of how it works. And you're saying like compared to Bitcoin DLCs, for example, that's just strictly peer-to-peer, like it is what it is.
Yeah, so on it, it's really a design choice. So most smart contracts enable something like this, where they'll say, how are we going to be able to allow this to be updated? Or they do something where it can be upgraded with the use of like a governance vote, and so that results in other vulnerabilities as well. And so it's kind of like decentralization theater, I would call it. Versus like, and certainly you have like some aspects of centralization that exists on Bitcoin as well, right? So I guess we should first talk about like, what is a DLC? Like we've mentioned it a couple times. A DLC is basically a Bitcoin Oracle contract. So what it allows you to do is it allows for any type of financial contract to be created on the Bitcoin blockchain. This could be a bet. This could be, some type of lending application. It could be a futures contract or an options contract, which is one of the things that we're focused on. And so within a DLC, you obviously need an oracle, right? You need someone to report on the Bitcoin price in order for you to speculate on the price in some manner. And so obviously you run into centralization there, right? But at least in that, that's a problem that can't be solved. You're not going to get the Bitcoin price from the Bitcoin blockchain itself. You need to get it from external. And so there you can have, one oracle or a multi-oracle system, but at least you're just relying on the oracle for that one price feed, and you're not relying on it for the actual contract itself. The other thing too, the oracle doesn't even need to know about your contract. It's just like putting data out there. Whereas like when you're looking at an Ethereum smart contract, really the admin is obviously in control of all of the code that's associated with that contract.
Yeah, that makes a lot more sense. Now, I just wasn't familiar with if that was like a requirement for all Ethereum smart contracts or that's a design choice. But inherently that gives a lot of power to kind of one entity to be able to change it. So that's definitely an issue. And the oracles are interesting because this was a whole rush, Chainlink and the lot. But from what I'm understanding, like a multi-oracle approach is kind of better. Maybe you could shed some light on that. And is there even like a winner takes all, or, you know, what is the worth of these oracles in the marketplace? Because it seems like they have some worth, but it is kind of like a basic, you know, fundamental thing. Maybe not as hype as everyone thought back 2 years ago.
Yeah, I think there was a little bit of an interesting, like we should compare like probably like what exists in terms of oracles on Ethereum versus Bitcoin as well. And so I think there was this big hype and kind of this idea that in Ethereum, I think everyone had this concept that we're going to go and build oracles and they are going to be decentralized oracles. And I think that was really, you know, a misnomer to say, you know, that wasn't really true. If you're just, you know, spreading the risk to 15 anonymous parties, you know, it's really decentralized theater because you don't know if those 15 other folks are the same person or, you know, different people. You just don't know that. Not to mention the fact that Ethereum also ran into lots of problems with gas fees when you had like oracles needing to actually attest to a price, right? They have to put that data on chain. So they actually have to create a transaction in order to update the state for folks to utilize that for different smart contracts. And so that doesn't mean there's no worth to oracles, right? It just means like those are different design choices that exist in Ethereum, but the design choices are very, very different in Bitcoin, right? Oracles on Bitcoin using DLCs, they don't need to create a on-chain transaction. They simply create a Schnorr signature, right, for like whatever the outcome is. So that signature is then used to be able to unlock the DLCs, but they don't need to know about the contracts that are created on-chain on Bitcoin. They're simply creating these signatures in the background. And one of the nice things about DLCs too is, you know, what's the worst case scenario, right? Say the Oracle goes out there and they create an attestation, you know, or say the Oracle disappears actually, right? You also have a refund transaction that can be utilized to get your principal investment back. So there's a lot of these mechanisms that exist in there. And then obviously adding additional oracles if they're reputable. If you're doing the same thing as Ethereum and you're just saying, hey, we're going to get 15 anonymous participants and they're going to come in here and provide like some type of price attestation, then you're doing decentralization theater once again. But if it's like, hey, I've got like this reputable exchange or this reputable company that's providing this price feed, then that's really who you're putting your trust in. And so I think that's really the key difference.
Yeah, it seems like there's just a lot more risk because of the centralized nature of Ethereum, which fundamentally is, what you would assume, but you still hear just all about smart contracts and why they're so great. We could just drop smart contract. And essentially like DLCs, I think of them, they're still like smart contracts. They're just like in the greater bucket. They're just different because they're on Bitcoin. They have a bit different fundamentals. So why don't we maybe run through an example of how that works? If, you know, say you and I bet that, Trudeau like wins or loses the election, whenever that is. I have no idea when that is. How does that work on the Bitcoin blockchain, like from the inception to the execution and the whole lot?
Yeah, that's a great question. First, I just wanted to say, like, yeah, I agree with you. I think DLCs are smart contracts, but I think they're like simple smart contracts, right? It's like keep it simple, stupid, right? Or keep it stupid simple. You know, just make it as simple as possible, and that's the nature of it. So if we go into it, like say you and me are entering into a bet. Geez, who's voting for Trudeau? I don't think either of us want to do that.
I'll vote for him since I don't live there. So I think.
Oh, okay. Well, thanks, Tristan.
just because there has to be someone.
Yeah. All right. So Tristan's voting for Trudeau. I'm voting for. I guess I'll do the opposing guy right now, which is Pierre Poilievre. I think he's a Bitcoiner. He's on his way there. So we'll see.
Closet Bitcoiner.
Closet Bitcoiner, yeah, exactly. He's been to Tahini's. He's been to he bought like a sandwich using Bitcoin or whatever. But say we're entering into this contract, right? So Tristan, so generally in the DLC, what happens is you need to like discover your other counterparty, right? So we with Atomic Finance, we make this really easy. Like obviously, we do matching using like IRC protocol. So just you just need a protocol in the background for the parties to know about each other. But once you've got that, the process of entering is kind of simple in terms of like someone creating an offer. So I might say, hey, I'm voting for, Poilievre. And then, Tristan sends back an accept message that says, hey, okay, sounds good. Here's my UTXOs. Here's like all of the possible outcomes that we have. So we might have 3 possible outcomes, either Trudeau wins, Poilievre wins, or like contested, right? Which might mean some type of refund. And so we go and we create the signatures for those 3 possible outcomes. He sends the accept back to me. I create the sign message, and then Tristan can actually go and then broadcast that on chain. So what that looks like is actually very similar to a Lightning channel, where you have got like a 2 of 2 multisig. It's a very similar thing for DLCs, and that will just sit there, right? So the elections I don't think is till in 2025. So I guess our Bitcoin's sitting there for 2 years. We have we don't have short time preference, and so it's just sitting there. Eventually, the Oracle goes and creates that attestation, and behind the scenes, we've already created the execution transactions for all the possible outcomes in the background. And what happens is when the Oracle actually creates the attestation, let's say Poilievre wins, because I don't want to think of the future if Trudeau wins. So let's say Poilievre wins, and then they go and create that attestation. I take that signature and I use it to unlock that off-chain transaction, and then I can go and put that on the broadcast that on the Bitcoin blockchain. So at all times, like on-chain, all it is a 2 of 2 multisig with some off-chain signatures, very similar to what you have in Lightning, where you have a 2 of 2 multisig with some possible state updates in the background. So that's really all a DLC is. What's the chance that someone can come in and actually hack that contract, or a signature is created incorrectly? Very, very unlikely. In fact, like the only person that might be able to take advantage of that is really my counterparty, right? Which, if you've constructed everything properly, is very unlikely to happen. We've been running DLCs for like 2 years without any issues or any need to, have a refund transaction. So these are really, really secure.
Is there any concern with the amount of Bitcoin that's stuck in there in the contract, like Lightning channel, there's limitations to bandwidth and things like that. Is that a concern at all for DLCs? Like if you wrote like just an insanely large contract in terms of, I guess, size of what it is or the actual Bitcoin?
Yeah, so I think it's a little bit different than Lightning, where Lightning, you need to do several hops along like the different channels or different nodes. And so that's why, if you're doing a very large payment, it oftentimes fails because there's not enough liquidity along one of those hops. Whereas if you're doing an on-chain DLC, you could put 1, 5, 10, 15, 20 Bitcoin, however much you want, and it's just directly with your counterparty. So, as long as it's peer-to-peer. There's a different conversation of like, hey, this is also possible on Lightning, like Lightning DLCs, and you can do this across multiple hops. But to be honest, I think that's going to be nonsense because, say we're entering into that bet that we just talked about, Poilievre versus Trudeau, Canadian election, we would need to, everyone along those hops would need to lock their funds for the next 2 years, right? And who wants to do that? And so I think it's more likely that, people are going to do, on-chain DLCs where they enter into a contract with a counterparty on-chain, or they open up a Lightning channel with the direct counterparty that they want to, do some trading with, and then that's, what they'll do within that Lightning channel.
Yeah, that makes a lot of sense. I figured that was kind of a stupid question, but I had to ask it because I know there's a lot of folks listening who probably have a very basic understanding of Lightning, but that's more so, like you said, a liquidity issue amongst the nodes. So that makes a lot of sense to me. And then I guess where we transition to here is obviously most people are not going to, be writing up their own contracts and things like that. It's very technical. Well, it's simple, but it's still, requires skills that I don't have. So that's kind of where Atomic Finance steps in. And it's really cool because it is pretty simple. And you have this security on the Bitcoin, chain. So I guess at a high level, Atomic Finance is, focused. You guys are focused on providing yield on Bitcoin. And that's, as mentioned, a kind of scary word right now after what went down in the previous 2 years with FTX, BlockFi, Celsius, and the lot. What is Atomic? How is Atomic utilizing DLCs to do this differently? And then we could obviously get into self-custody. But maybe we start with the DLCs. Like, you're basically just providing an on and off ramp for these contracts for people, right?
Yeah, exactly. So I think first, to break this down, like what we're trying to build with Atomic really is to make it as simple as possible for people to be able to access not only kind of these more advanced concepts like DLCs, like what is a DLC? How do I use it? What if it's just in an app and it's a click of a button and it's super simple? That's really what we're trying to enable for folks, is for open finance to be simple and easy for folks. But then, like, on the other hand, this concept of yield, right? Like, after the last year, that's a scary term. What is yield? Where is the yield coming from? If you don't know where the yield is coming from, you are the yield, right? We've heard that so many times. We had BlockFi disappear, FTX disappear, Celsius, disappear. I think they're in the courts right now. So much nonsense that has happened. And so our real goal there was to provide a way for folks to know exactly where the yield is actually coming from. And so what we've developed is, we've taken, trading strategies specifically around options that we've developed. And what our app does is offers those strategies to users using DLCs. So we use what's called a covered call strategy. So what is that? So first of all, what's an option, right? What's an options contract? It's basically just, it's kind of like I like to describe it maybe as like a coupon, right? Like you have you pay for a coupon to be able to buy Bitcoin at a certain price. So say today, like for example, the Bitcoin price is $26,000. So maybe I want to buy a coupon and to be able to buy Bitcoin at $30,000. And say if Bitcoin goes all the way up to 35, I can buy it at a cheaper price. The reverse of that is selling a call. And so you can do that in a covered call, which is like, hey, if I might sell a call, I might sell the ability for someone to buy Bitcoin at $30,000 today. And in return, I get to earn a return from that coupon that I'm selling. And so what this allows is folks to be able to, earn a return on their Bitcoin. If I'm selling a call for, $30,000, or maybe next week I'm doing it for 35, I'm earning a return every single time. And so what we've done is we've built a strategy that automates the process of choosing when to take those positions. We always do weekly options, right? So it's not like you're saying, okay, $30,000 Bitcoin by like the end of the year or next year, right? That's a huge amount of time to wait. We're doing a position that ends next week. And so we've done a lot of work on, the trading side of things to ensure that we build a very conservative strategy to make sure that likelihood of that hitting is very low. And if it does, there's not a large loss. Maybe we'll break that down a little more.
Yeah. It's the call options are definitely, a lot of people might be familiar with them from trading stocks. Like this is a traditional, trading strategy tool that people have been using for quite some time. To me, I think of it, it's like a strategic bet that you're kind of making on the price, right? And depending on the time frame, you can get into that. And it's interesting because you do still have to realize that there is always some risk to trading call options, things like that. But the way you guys have done it is you're saying, you take a very conservative strategy. You've got this down to a science, and this is where the yield is coming from. And I would ask, how transparent are you? Because I guess let me break it down first, because I have gone through the onboarding and stuff with Tony. Is right now you guys have like this one conservative strategy, and when you put in your Bitcoin, you're kind of locked into that for a period of time, and then you can add more Bitcoin, you can pull it out, whatever. But what I was asking Tony is, are you guys going to be like transparent with your strategies at all? Because what I see is that's kind of cool is, people think that certain things are going to happen in the market right now. Like right now, for example, people might be a little bearish based on what's going on with interest rate hikes. So they might want to align that with what you guys are doing. And obviously it could be completely different time frames. Like 1 week time frames are very short in general. And most average everyday people don't consider weekly time frames on Bitcoin predictions. So how do you balance that, like transparency and then kind of like the, I guess you could call it just the strategy that you've worked out based on your trading history and, predictive mechanisms?
Yeah, that's a great question. So I think in general, when it comes to strategies, obviously transparency is something that's very, very important to us. And that's kind of part of why we're building these tools, right? Open finance that are, transparent to see exactly what's going on. But there's also another side of it, which is there's a reason that like most, proprietary trading firms don't reveal how their strategies are done, right? Because once people know how a strategy is done, a whale can come in and replicate it. And now, the potential returns you would have gotten from that are gone. And there's an even a worse potential for, folks to be trading against you, which is obviously dangerous. And so for that reason, we don't publish exactly how, we generate the signals, but we do provide a transparency on like what those signals are at the time that they come in. So, if you're using the Atomic Finance app, for example, you'll get a notification that says, hey, this cover call position was entered. And typically like, this isn't happening like every single week too. This, sometimes there's no trades in the month because it's not always a good time to enter a position, right? You might have 1 trade per month, 2 trades per month, 3 trades per month, right? And so you go and you get that signal and that lets you know that, hey, a position's been entered. But it's really about like trying to make it as simple as possible for folks. And the way I like to think about it too is people might think, hey, a cover call, I'm really bullish on Bitcoin right now. I don't want to enter, that position. But what's really interesting about it is the strategy is really more about monetizing volatility of Bitcoin, right? As we transition over the next 10, 20, 30, 50, 100 years to eventually a Bitcoin standard, right? There's an opportunity to make returns on your Bitcoin during that time. And actually during the bull market is where we see very, very high volatility of Bitcoin. That's actually where we see the largest returns in the strategy, which is, really fascinating. And, that's just the nature of options, really.
Yeah, I think that patience that you guys follow is key because the average, well, first off, it's this weird audience that you have for your products right now because the traditional person would think nothing about, giving someone their fiat, getting a return, hedge funds, they don't reveal their strategies. Ray Dalio might come out and be like, I'm bearish or bullish or whatever. And it's similar all around. But Bitcoiners, are very in tune with the market. They think they're smarter than everyone and they probably want to know exactly what's going on. But inherently, yeah, that's not like a common thing. But I think it's important that you highlighted what your strategy is. And that's, yeah, you're not like forcing positions. There might be 3 trades in a month. There might be 1 in 3 months. It just depends on the signal. So that shows that you have this down to a science. And if it hits your threshold, that's good. But you're not going to like kind of change the goalposts just to enter in a position. And I think based on that, you have a very good track record. And what my question to Tony was as well when we first talked about is how do you prevent, 5 wins getting erased by 1 loss? And I think you have a pretty good downside track record as well. Like when it does happen, it's pretty minimal hit on the overall yield gain for, so let's say like a year-long period.
Yeah, so I think on the strategy currently, historically, and this is obviously going to vary from strategy to strategy. So the current cover call strategy, it has the largest downside risk was, I think, like 1.17% over the course of historical trading done over the course of the past 4 years. And so that's obviously really solid. We also did a lot of work to make sure, like whenever you're developing a strategy, for folks that know about strategy development, one of the really important things is to make sure that there's not what's called overfitting, right? So if I want to go develop a strategy, I could just say, hey, you know what? Over the past like couple of years, I'm going to sell at 65,000 and I'm going to buy back in at 15, or 17,000, right? That strategy is going to perform very, very well, right? But obviously we all know it's extremely overfit, right? Like I just looked back in time. And so what we did is we actually used signal generation going all the way back to 2012. And then in the process, we do a process that's called like walk forward analysis, where we actually look at, okay, we've tested it over this period of time. Now we're going to go simulate live trading over the next like year or 2 years and see how it performs. And so in that way, you get a strategy that's much more likely to perform quite well in a real environment, rather than just someone who's picking numbers, out of a hat, with historical previous data.
Are you interested in 100% grass-fed, grass-finished bison meat? I'm excited to be a partner with Falls Family Ranches. Based in Wyoming, Falls Family Ranches is raising high-quality bison meat the way nature intended. As a native large ruminant of North America, bison is one of the most nutrient-dense foods you can consume. If you're interested in trying out their bison boxes, use code Tristan, TRISTAN, 10 for 10% off your first order.
So, yeah.
And that's led to what I think the average yield is like 7-8%, right? So far. And this is with the conservative strategy, correct?
That's correct. Yeah. So I think right now it's 7.5% APY on average over the past 4 years. It's been a little bit lower lately just because Bitcoin volatility has been lower. And so, that's the nature of the strategy. You can have, if you're making 8% or 7.5% in a year, you might make, 6% of that, or you might make the majority of that during the course of 6 months, and then the next 6 months is lower. And that's just the nature of the strategy. And so it's, that's one of the reasons it's important to be consistent. We're also going to be releasing some additional strategies as well that are a little bit different. We have some long call strategies in the pipeline that are coming very soon, have a much kind of larger drawdown, but are much more aggressive on the way up. And so we're really excited to, get that out to folks. Usually what we say is hey, put the majority of your Bitcoin in cold storage. But if you want to take 1, 5, 10% of your Bitcoin and put it towards these type of strategies, it's really just an opportunity to take advantage of monetizing volatility for Bitcoin. And make those additional returns, but don't be going out there and gambling your whole stack on a long call here or a short call there.
Yeah, that's important advice because the average person who thinks this is amazing, this is a tool. I think it's important because we're still early, right? So if you do make 7-10% a year on Bitcoin now, it could make a significant difference in 5-10 years, and potentially also in a bear market. Instead of holding and just seeing your net worth drop, you could maybe accumulate a little bit more Bitcoin by just having 10% or whatever in a contract like this, in a strategy like this. So that's interesting. I also see that on your app you also have manual calls and options you can do. Is that something that you think is going to be popular? You think people are going to enjoy that? I think it is, based on the trading nature of Bitcoiners. But I see, again, be careful with what you do there.
Yeah, absolutely. Well, one of the nice things is we're introducing manual very soon, and we're specifically going to be introducing, long calls and long puts. And so, as I mentioned previously, long calls and long puts, that's you pay the coupon in order to be able to buy Bitcoin at a certain price or buy Bitcoin at a lower price for puts. Now, this is all Bitcoin settled, so you're not worried about actually, we're not dealing with USD. It's all, a Bitcoin native app, which is really, really cool and really nice. But I think there will be some excitement for that because if, even during a bear market, if you're sitting here and over the next couple of months, that the United States government needs to sell $3 billion worth of Bitcoin that they've, acquired from FTX, then, you might be expecting some downwards movement. And so something like buying a put can be really attractive to folks because it can give you an opportunity to be able to take advantage of, price movement downwards in order to stack, more stats. And so we've seen a lot of our users already seen, a lot of interest in this. So we're really excited to get those features out. And, allow for, people to obviously speculate. Obviously stay safe out there. Don't be a degen gambler, but, and make sure you do your research before, you try trading options for sure.
Yeah, I think that's really important that you said that, because it may seem obvious, but every time the cycles happen, no one really gets the top right. No one really gets the bottom. I mean, to me, like, 15K when we were there, I was like, this is looking very bottomy. I'm going to buy some Bitcoin here, but you never know. And the fact that, maybe you take a small percentage, and then again, you're hedging to the downside. And I like having that ability to do that. I think that's really nice. But I guess it's still trading, right? Like, you just have to think of it like that. You are taking risk. But the most important part of atomic finance that we haven't covered is the custodial aspect of it. So what is Atomic doing different from BlockFi and Celsius in this regard? It's a very obvious answer, but let's hear it.
Yeah, great question. So, I mean, we should look at first, what does BlockFi and Celsius do? They take your Bitcoin, it sits there, and then they go and lend that Bitcoin out. They go do things with it. They lend it out to someone who lends it out to someone else. And then you hope at the end of the day, you're going to be able to get that back. But if anyone along the line, like something goes wrong, that Bitcoin is nowhere to be seen. And so obviously what we're doing, the whole time talking about DLCs and, contracts on top of Bitcoin, that's how we allow folks to get access to these positions. So so the whole thing really is non-custodial at the end of the day. You're entering into this with a counterparty, which is our market maker called Calypso. And so they take the other side of the trade. We run the Oracle. So obviously you do need to have trust in us, as the Oracle. We do have plans later on to move to a multi-Oracle system. But that's really where your trust is going. But you don't need to worry about, us sitting there and like running away with your Bitcoin. We don't have custody of it. We don't want custody of it. We want you to hold your own Bitcoin at the end of the day. And that's really, I think, the way that financial tools for Bitcoin should be built, right? If we're going to just keep sitting here and build, custodial financial tools for Bitcoin, we're going to end up with FTX in the future. We're going to end up with BlockFi in the future. And so, why is it that if you think of Bitcoin, right, you have cold storage, you might put that in your cold card. You've got Lightning that's non-custodial. But if you want to do anything financial related, you have to go to an exchange. And I think that needs to change. And so we're trying to be kind of like one of the first folks in the industry that's really trying to push that more and get more financial tools for Bitcoin that are non-custodial. Yeah.
Yeah, I think it's so important because it's needed. And if you want more people to come on board, like my mom, for example, like owns some Bitcoin, but I was I need to get her cold storage. I need to get her up to speed on things. It's like, this is like a perfect solution for someone who's like familiar with, traditional hedge funds and how they operate and investing, and people kind of, having simple solutions so that you don't really have to worry about it too much. And that's probably why, BlockFi, I mean, all these exchanges, Coinbase, they're so attractive because like, oh, I just buy Bitcoin, I leave it in there, I don't really have to think about it. But obviously that has a tremendous amount of risk that people don't realize. And this is just, I think, the beginning, but it's really cool. And what I want to get into first, before maybe other financial tools, is the wallet. So you guys had to build a wallet on Atomic Finance. How is this wallet structured? What's the security of it? Should anyone be concerned having 10% of their stack in there at any time? I guess give the details of that.
Yeah, great question. So we built the app initially iOS only, and one of the reasons for that is because Apple has some security elements that are really nice. The secure enclave. So your private key is stored within the secure enclave on the device itself, and the only way that can be accessed is obviously with a PIN, or Face ID can also access that as well. And so if someone wants to get access to your private key on this device, they're it's a lot more difficult than just having something in plain text on some other type of device. So we built it that way on purpose. And the other really nice thing as well is once you've got your funds in the device itself, generally you're investing in kind of a longer term strategy. So if you're investing your funds into, say, the cover call strategy for a month at a time, Well, now your funds are actually in a 2 of 2 multisig, which is the DLC, right? And so, even if someone comes along and does a wrench attack, they're not going to be able to get those funds right away. And so that's kind of how we think about the security there. Obviously, we have lots more things planned in the future, like say adding things like 2FA, or even being able to have like some type of multi-sig setup that can allow you to store that with the device, and in addition, a hardware device as well. But that'll be coming down the line for sure.
Nice. That's exciting to hear. Because I know the storage aspect has definitely been a hot topic lately, and people are taking a lot of responsibility in that, which is fantastic. So, but yeah, there's always a work in progress, and at the end of the day, it is your keys. So that's fantastic that you guys obviously have that principle that nobody else is doing. What other products are on the horizon for Atomic? Something that's always interesting is kind of Bitcoin-backed loans, and I'd love to get into that a little bit, because there's this nice, way potentially in the future that you could, never have to sell your Bitcoin. You just hodl and get Bitcoin-backed loans. But obviously, there is always some risk, and the volatility is still somewhat high. So how does that work? That's something you guys are planning on doing, correct?
Yeah, I think eventually. For that, eventually we might look at doing something in that arena. Like on the immediate horizon is really more focused on like getting some more strategies into the app. We're launching long calls and long puts. Down the line, we want to look at like short calls and short puts likely. And so really there's lots more work to kind of do in this arena around options. And then maybe in the future, like venturing into loans again. Like obviously that was a previous product that we did. There's actually another DLC company, Lava, that is actually doing some work with Bitcoin-backed loans. I think in general they are a great tool to allow folks to be able to take advantage of getting access to the value of your Bitcoin without selling it, or like say today, right? Like Bitcoin price is at 26,000. It might drop all the way down to 20,000. But if I take out, a small loan on my Bitcoin, $10,000 loan, $5,000 loan, and I use that, and then, later on Bitcoin, continues to rise as we move into the bull market, I have avoided selling my Bitcoin. But there's also another like kind of darker version of the story, people who take out a loan, at a very high kind of ratio at the top, and, Bitcoin continues to drop, and they end up having to pay that off, and then they're not able to take advantage of buying Bitcoin at lower prices. And so, it can, as anything like with these financial tools, it's a tool at the end of the day, right? It can be, you can use it in the right, in a positive manner, or it can be used in a manner that ends up biting you in the butt. And so I think that's something to be really careful of.
Yeah, to me, it seems very risky, and it might be early. Like, I think in general, it's volatility, maybe, I don't know. The volatility piece is something that's interesting, and I'm curious to hear your thoughts on that, because obviously with the supply, continuing to decrease in terms of additional circulating supply, every block, every 4 years, every halving, people think the volatility will come down. People think that, obviously that's dependent on the US dollar, so it could still increase over time. But yeah, you're just kind of taking a risky bet, and it would be very terrible to get called on your Bitcoin. So at the end of the day, there's still other alternatives, I think, maybe in the fiat world that could be better. But yeah, what are your thoughts on the volatility of Bitcoin over time? Because you would think that it comes down, that potentially then would affect, your business model or your strategies, because you are taking advantage of volatility. But at the end of the day, like I said, it's really probably dependent on the US dollar and macro environment of everything.
Yeah, well, it's interesting. Actually, we had the lowest volatility environment over the past couple of months. That's one of the reasons why like premiums have generally been lower on Bitcoin. I fully expect that to come back during the bull market, which it does kind of every cycle. But I think it's likely that we're going to see if you just think of it, right? If we continue to have more growth in Bitcoin over time, it takes more and more money in order to move the price up or down. And so as we get the growth of this asset, we really start trending towards, a stable coin, right? Like eventually options on Bitcoin aren't going to make any sense, right? There's no options on US dollar itself, right? Because the premiums would be so infinitely small. And so, I mean, eventually our business, decades and decades and decades down the line is going to be obsolete, right? But we have a long ways to go before that happens. And when that does happen, it's likely that Bitcoin is just going to be the settlement layer. And so I think slowly over time, we're likely going to see volatility increase during the bull markets and kind of come down dramatically during the bear markets, and that's going to continue to happen. And the volatility is going to decrease more and more over time as long as Bitcoin kind of continues to rise with each bull and bear cycle. And I think that's just the natural progression that you expect.
Yeah, I think so. I think, you could mix in, obviously, some volatility from the US dollar, money printing, all that jazz. But overall, if our market cap just continues to grow in the trillions, then it's going to be harder to move the needle. So I'm curious as well, do you think these 4-year cycles are going to be a thing forever? Or do you think they're just going to slowly become, they'll slowly become less and less pronounced, as you said, but yeah. They seem to always be priced in, but then they're not.
Well, it's like, I always wonder this too, Tris. I'm curious to hear your thoughts on this because I feel like, it's always priced in. But, what is it? We have 900 Bitcoin that's mined every single day, right? And when the halvening occurs next year, that gets cut down to 450. How is that priced in? That's selling. Yeah, that's selling pressure, right? That selling pressure that's coming every single day. It's not there anymore. And then you go from 450 every day to 225, right? How is that priced in? So I think like everyone likes to say it's priced in. Everyone likes to, have that in the back of their minds. And then the halving occurs and we see the real nature of this. But we all know that at the end of the day, the halving cycles, have less and less of an effect on Bitcoin and, in the long term in terms of the market size of it. And so I think that's really what is priced in is the lessening effect of the block halvening more than the actual, block halvening itself. So
I agree. Yeah. If you listen to any, the riots of the world, they're just like, we're trying to mine as much Bitcoin as we possibly can, like right now until the halving. And then, they have to figure it out when that comes, right? Like they have a plan, but it's not executed until like the moment that it actually happens. Cause they're up until the last very minute until that last block, they are trying to mine as much Bitcoin as they possibly can. And then it's like, all right, plan starts to transition to half the rewards.
Yeah, honestly, Tristan, I wouldn't want to like being a miner. That's a hard business, man. Like that's tough. Like I feel for those guys, and like the other thing too, I feel like miners really need to do is financial planning, right? Like planning out. Okay, in so many months, this is going to be cut in half. Let's make sure that we're managing our treasury effectively. Those miners that went out and took Bitcoin-backed loans at the top, right, of last year, how many miners died from, doing those types of things? And so I think having something like treasury management or having like, tools that you can actually put your Bitcoin into, or, financial planning tools for miners, I think that's going to be incredibly important as we move forward. And I think the miners that are going to survive are going to be the ones that actually do that.
Yeah, it's fascinating because it's so risky, really, and there's no safe company out there like 100% when it comes to mining, and still, even though. And that's why you see the volatility in their stock prices. It's actually like way more volatile than Bitcoin itself, which is interesting as well. Maybe you guys venture into capitalizing on volatility of that, but no, it's interesting because it's and it's gotten to this point where there is such a large expense to become a miner from the hardware perspective of ASICs, from the electricity requirements needed. So it's really only kind of like the big boys duking it out. I know there's more, sovereign individuals who have some small miners, but I think really they're just trying to get non-KYC sats. And maybe that's something we could talk a little bit about is, the KYC aspect of Bitcoiners. That's, something they're fearful of, especially with government crackdowns. What's Atomic's stance on that? And is there anything you guys are doing specifically in that realm that's maybe more beneficial to the individual?
Yeah, for sure. Well, I think like in general, like I would love to have the vision for like no KYC forever, right? For any financial tools that Bitcoin, like if you're able to get access to, right, is there KYC for sending a Bitcoin transaction? No. But the reality obviously is that, as we, as the time changes and, regulations come into place, like obviously, the nature of what we do is likely going to have to change. So we don't require KYC right now, but that might change in the future if regulation comes into place that, kind of changes this gray area into, much more clear cut. But I would love long term to, just continue doing, no KYC financial tools, because I think that's really the way it should be done, right? If you're able to do Lightning payments, if you're able to do transactions without having to give that information away or even open yourself up to, it's right. Like KYC is a security risk because we all know that the databases are going to be hacked and that information is going to get out there. And so I would love for that to continue for financial tools. But we obviously need to, stay compliant for the long term. And so that's obviously something we're always looking out for. Yeah.
Yeah, it's interesting because I was trying to remember. I was like, well, I didn't have to, link my bank account because it's just Bitcoin, right? So it actually, it's quite nice to have that, non-KYC in the beginning. And that's the benefit of having just Bitcoin. Obviously, if that Bitcoin is traceable back to your Coinbase, blah, 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 that's something you have to worry about personally. But is that a big, like, you think that's coming? You think there's more regulations coming and KYC is going to be implemented widespread? And will that happen in Canada first or in the US, or how does that change your outlook? Is Atomic just based in Canada as a company right now? I'd assume so.
Yeah, we're based in we're based in Canada, but obviously, like I think certain regulations in the it's funny, right? The United States generally puts out regulation, and then Canada goes and follows and does the same thing. Yeah, we like to copy you guys, except for the ETF. I don't know what you guys have been doing, but and so that's generally what happens. And so there's certain kind of regulations that are up in the air right now that. Especially around the transportation bill, like, hey, having to any transaction that occurs over a certain amount in the United States, like having to KYC for that, which is really unfortunate to see. I believe the current is like that isn't in place or won't be in place until the start of 2025, and it's still up in the air. But if that ends up going through, I think that's really sad in general for non-custodial finance, especially for Americans, because it totally changes the game in terms of like the requirements of, interacting with US citizens. And so I hope that there's more pushback against those bills to, in order to like kind of continue to allow for, finance and transactions and payments to be done, without having those kind of hard requirements. But, it's not looking, great right now, but, maybe we need to, drum up some noise around those, the transportation bill, and get people to push back against that,
Yeah, no, it's great to hear that you hold this perspective, obviously, as a through and through Bitcoiner, because that's something that's, it's a large concern. And if any of those listening are not familiar with KYC, it's know your customer. It's having your identity tied to your money, basically. And that is something that we've already seen, bank accounts of people have been frozen, and the money going to the truckers in Canada being frozen, and people fined for things like that. So it's probably only going to get worse in the short medium term, but again, if we stand back and, like you're saying, kind of have some momentum to protect ourselves against this, that would be helpful. So that's really cool to have that, at least in the short term. And obviously you guys want to do what's best for your customers, being Bitcoiners and understanding that, but having that model from the get-go where you're not linking a bank account, you're just in Bitcoin, gives you that advantage from the very start. So that's what's really cool about it to me. And I guess in the greater sense, I'm thinking more and more about this macroeconomic environment that we're in. And I had Joe Consorti on, which is a fantastic conversation about kind of where we are right now. And I'm curious what you think the state of things are, and how, what did the Fed said today, that we're not going to go into a recession until 2027, which is hilarious. I think it's a giant clown show, as Marty always says, and it's really just entertaining for folks like us. I don't know, we're kind of like young, maybe we have some money, but it's like, wow, this is an exciting time because there's so much like volatility. You can take advantage of it, and that's your whole business model. And I'm like stoked for the next 12 to 18 months to play out, because I think it's like one of the best opportunities to capitalize financially. Probably in our lifetime, we weren't around for 2000, we weren't around for 2008. Now we have Bitcoin and potentially the first recession that Bitcoin's ever gone through. How do you kind of see that affecting Bitcoin with the halving, and then also just in general? You think it's going to be just like bloody chaos and happen really soon, or you think they're just going to turn on the money printer? And obviously we don't know, but I'm curious to hear your thoughts.
Yeah, I'm not an economic expert, and so I'm more of a technical guy. But if I was to, put my hat in the ring and think about this, it seems to me like, there's just been a deterioration over time of like, of fiat, right? Just in general, like the devaluation of the currency over a long period of time, lying about the numbers of like the amount of inflation, a bizarre, negative effect on the banks that occurred with, Silicon Valley Bank and, things of that nature, where the bank's business model is now starting to change. Talks about CBDCs, this bizarre environment that is starting to be unleashed. And a more and more difficult economic situation, I think, for most folks. The costs of building supplies have gone up like dramatically. The costs of housings or the average mortgage have gone up, dramatically. And so it seems to me like we're not gonna hit a recession until 2027. Like, we're already in a recession. What are you talking about? Like, that's nonsense. And so I think the question there is, during times of an economic recession, is it likely for the price of, people, like, I guess the question there is like, is Bitcoin the safe haven asset, right? Like, that's the question that all Bitcoiners are asking. And so if it is, then we see obviously a large price up during the bull run, and people start to move their assets over to Bitcoin. But I think the other question is, your average person is seeing more and more of their paycheck kind of being whittled away over time through taxation, through the cost of goods, through inflation. And whether that has a kind of negative effect on, their free funds being able to flow into Bitcoin as well, I think we have yet to see. So I don't know. That doesn't really give an answer. I'm curious to see if we'll see. I obviously hope that people start to see it as a safe haven asset, but we might even see less of a run up than last time. And I think it's going to take more and more to move the needle each time. And so I think volatility comes back, absolutely. But if people are shooting for Bitcoin going to 1 million for the next bull run, I think they're probably out to lunch. If I'm being honest.
Yeah, well, that's ridiculous. Well, I hope that doesn't happen, because that means like literally the US dollar is just collapsing completely. Yep. And yeah, for me, it's like it's still a risk on asset. So if everything, and we've already seen this large influx into like more safe haven investments, like money markets and treasuries that actually have some yield, and things like people are just taking their money out of stocks slowly. But they're not, the average person's not just going to be buying more Bitcoin. And as you're mentioning, that has smaller pie to kind of choose from. So I think it's still on the downside, it's going to run with the rest, and on the upside, it's going to outperform, because if there is upside, it'll be due to expansion of the balance sheet again. And then that's where it comes into play as kind of like an inflation hedge, and everyone gets fired up about it. But I still think, we're just too early to where it's not like a very risk on asset. And that's what kind of Joe said on here. And I'm just kind of paraphrasing a lot of what he said, which kind of cemented my perspective. But I think this always happens. I think we get like close to the halving, and the bull market, and people just get like very eager. Like at 30K, 32K, everyone was so bullish. BlackRock obviously is a big reason to be bullish, but there's no definitive outcome on that for some time. You can speculate all you want, but I think everyone just gets so feverly bullish. And I'm like, well, I kind of hope everything goes back to 20K so I can buy more. And yeah, I don't know, trying to be retired in a few years here, right? So that's fine with me.
Well, I feel like it's also such a weird thing because okay, if we think of every bull run that happened, right? In 2013, 2014, what percentage of Bitcoiners just became Bitcoiners during that time? Or 2017, 2018, what percentage of Bitcoiners became Bitcoiners just during that time? So you have these run-ups that keep happening, and you have this hopium that comes in, and lots of people come for that hopium, and they end up getting wrecked, and then they learn about it. So I think that's the bullishness that comes out of this is people come for the get rich quick, and they stay for the sound money, right? And I think that's, if we can keep pushing that education, right? Sound money. And I guess what we're building, sound finance for sound money, then we start to see more and more changes in the inevitable. But I think at the same time, Bitcoin is not inevitable, right? We still need to make sure that we do the necessary things and we don't, from a technical perspective, we don't ossify Bitcoin so much that it doesn't make the changes necessary in order to, make sure that it can scale and get to the people that actually need it. We're not ready for 7 billion people. We're barely ready for 100 million. And so we got a lot of work to do.
Yeah, well, I implore people, and we have a referral or ambassador programs that you can get some cool startup benefits because they're still early. And I would just say, check it out, right? I got a small amount of Bitcoin in there. I'm excited to play around with it. I'm excited that, it's self-custody Bitcoin. There are these tools to still earn yield. But again, everything you said, right? Don't put your whole stack in there. Don't just trade it all away on manual options when that's available. Take the principles of Bitcoin and play around with it. And yeah, let us know what you think. But Matt, appreciate it. Thanks so much for coming on. I think this is a great chat. And yeah, we'll link that all below. And thanks everyone for tuning in to another episode of Decentralized Radio. We'll see you next time. Sweet, man. That was great.